Well, I think it's a combination of the shift in central bank policies, not just the Fed, but globally, as well as a healthy mix of trade and geopolitical risks. If you put all those three things together, then I think it's a nice cocktail for gold to go higher.
It is a nice cocktail, but I guess aspects of that cocktail have been around for the last 3 years. So why hasn't gold had more momentum before the last couple of months? I mean, does it show that in general people are getting more bored of the metal as a safe haven?
Well, I think the safe haven aspect is key to the market going up. And for the last couple of years, we've had weak coin demand. We've had rather weakish bar demand. The jewelry demand wasn't especially good. So there's a lot of background factors that have also contributed to this market going higher. But I suppose the big change has been the shift in Fed policy beginning from December. You can't really say that the December issues in the last year were particularly conducive for gold, but they have moved now.
I mean, the way I see it, it's part of a bigger move. You've got a lot of these no yielding assets, gold, negative interest rates in Europe, Bitcoin, all making a move here, and the dollar's weakening. And to me, that seems like it's part of the same story, and I'm not quite sure what it says about risk sentiment. What do you think?
Oh, I think very much so. And if you consider that the dollar is the world's supreme paper asset and gold is the world's supreme hard asset, then it has a normal inverse correlation, and that's true over many years. There are periods where sometimes gold and the dollar will move together, but that's relatively rare, and it doesn't tend to last for more than a few months. So the weakish dollar that we've seen recently, added to the geopolitical and the trade risks, have been what's propelled the market higher.
Is crypto a rival to gold now?
No, I don't think so, because gold is in its last essence physical, and you can assume it, you can take it, it's portable, it also has marvelous longevity, which so far the cryptocurrencies haven't been able to rival.
How much exposure should you have to gold in your portfolio, Steve?
It depends on what year it is. I mean, you could have
right now.
You could have as little as 2%, as much as 5%. It depends on your portfolio. It depends on what your risk adjustment is. But you go tell a millennial to buy gold over Bitcoin, and that conversation is probably going to be a pretty short one.
Do you guys, though, traders on the floor, look at what gold's doing as well as, say, what the Treasury market's doing for risk sentiment generally? Do you think this is a bearish signal for
I think traders used to look a lot more at it, and it was where you hit on it with Jim on the first question, where a lot of that pot of different contributory factors have been out there, central banks easing, and been out there for so long that gold lost its safety quality. And I do think that there's actually the Bitcoin element to it, where you do get an inverse relationship to Bitcoin. Whenever these fiat currencies come on, you watch gold trade off. And now it's a little perplexing because you see them both running at the same time. And I think people are coming back to gold saying, we can't figure out anything. But as to what Jim said, there's a bar, there's a coin. Let me have something substantive in my hand, and then let's see where it goes.
How high does it go? What's your target?
Well, it's going to be difficult, I think, for the market to go too much higher from where we are now, because a lot of things happen on the physical side that you don't see immediately. One is that the bulk of gold jewelry, the bulk of gold, period, is purchased in the emerging world, and they're extremely price sensitive. So if you look at gold in CNY terms and INR terms, it's quite expensive. It's going to curb jewelry demand. It's going to curb bar demand. Also, recycling, which is about a third of the physical market on the supply side, is going to increase. It's very tempting to liquidate bullion and recycle it at these levels.